ES Audio.
From the Evening Standard in London, I'm Rochelle Travers, and this is The Leader. More global banking drama.
The liquidity outflows and market volatility showed that it was no longer possible to restore the necessary confidence, and that a swift and stabilizing solution was absolutely necessary. This solution is the takeover of Credit Suisse by UBS.
The Swiss president, Alain Berset, speaking there in a press conference about banking giant UBS acquiring its rival Credit Suisse for £2.6 billion in an emergency rescue deal. The takeover means thousands of London city jobs, including those in investments, back office and technology, are at risk. Credit Suisse is the most significant recent failure of a crisis of confidence in the banking sector. That has also seen the collapse of Silicon Valley Bank in the US in the last few weeks. This was Credit Suisse's chairman's response when asked by a reporter who is responsible for this disaster.
Well, look, hindsight is wonderful, and to point a finger, it's a fact that since 2021, with JDOS, we never left the headlines. We were overtaken by legacy situations, by risks that materialized last year. We were affected by a market model that does no longer work in this market environment.
The market turmoil has sparked concern over what this could all mean for the global banking sector. But as it stands, experts are not forecasting a repeat of the 2008 financial crisis. The Bank of England says the UK banking system remains safe and sound. Simon English is the Evening Standard's financial editor. Simon, is this potentially the start of a serious banking crisis?
I think it already is a serious banking crisis. Credit Suisse was a huge player in its day on Wall Street, and this cog of the financial system. It's one of the 30 biggest banks in the world. So it having to be taken over in a way that effectively signals that it was bust, that is serious. I guess the question is what happens next. If it stops there, well, for most of us that's sort of okay. The worry is that it doesn't stop there.
So as we know, UBS is taking over Credit Suisse. How significant is this, and what does this mean moving forward?
Well, it's huge, and it's a real embarrassment to Credit Suisse as well. It's sort of this national champion in Switzerland. People really care about its success in a way that you can't really imagine people here caring about how NatWest is doing, say. People are obsessed by Credit Suisse over in Switzerland, and the fact that it's now no longer going to exist, it's just going to be subsumed into its rival. It is a really big deal. As I say, the question is, what impact is that going to have on us? I think we'll be all right, but you can't say that with any certainty at this point.
What kind of impact could this all have on London specifically?
So there's going to be thousands of jobs going from Credit Suisse for sure. There were already thousands of jobs going from other banks in London because for the last year, clients have been very nervous. So there hasn't been that much trading activity. There also hasn't been very many floats on the stock market from new companies. Nobody really wants to make that leap at the moment. So the situation was that banks were already in a slowdown mode and already getting rid of perhaps 5% of their staff, which is thousands and thousands of people, thousands and thousands of quite well paid, taxpayers. So that will continue. And the question is, how many thousands are we going to lose from the city?
Why is it exactly that some banks are struggling so much at the moment?
Simply put, all of the banks have got their own issues, but if you had to pick out one issue, it's interest rates. Interest rates are rising quickly. And a lot of these banks, they've just got used to interest rates being at zero or near zero for years and years and years. So they had access to free money effectively. Suddenly that money is more expensive to get to, and their finances are impacted by that. And lots of them, for their balance sheets, they began to unravel quite quickly, is what happened.
There'll be people listening to this and might be worried about whether this is like the 2008 financial crisis all over again. Are there enough measures in place so that doesn't happen?
Yeah, there are. The regulations are much, much tougher. than they were back then. Ironically, the government is presently, or had been talking about trying to loosen some of those regulations. Something I think is a terrible idea. But the banking system in the UK is in pretty solid shape, I have to say. I think banks in Europe are a bit of a worry, but our banks are extremely well capitalised, and the Bank of England is a very powerful institution. So it isn't going to be 2008 all over again. You're not going to have our banks suddenly needing to be taken over, I don't think. The question is what happens to some of the others in Europe.
Let's go to the ads. After the break, our financial editor Simon English explains what this could all mean for you.
The thing that worries people most is their savings, isn't it? Money that they've got in a bank. Is that safe? That's what's on most people's minds. And the answer is that it is.
Why not hit rate and follow in the meantime? Welcome back. Still with me is the Evening Standard's financial editor, Simon English. Simon, how worried should we be about the current state of global banking?
I think we'll be all right. The thing that worries people most is their savings, isn't it? Money that they've got in a bank. Is that safe? That's what's on most people's minds. And the answer is that it is. So up to £85,000 per bank is what you can have. That's absolutely guaranteed by the government. So if you've got more than that, move some of it to a different bank is my suggestion. Beyond that, there's no way that they would let deposit insurance fail. It really would be, the end of society if that happened. So they just wouldn't allow it to happen. There's no way that depositors are going to lose anything. The Bank of England would step in if that was needed. And I think we're a long way off that. I don't think you need lose any sleep.
What has the Bank of England said about the current state of the UK banking system and the most recent global developments? So
it's said reassuring things, and it's made it clear that it will do whatever is necessary. Its statement today said, it ended up saying the UK banking system is well capitalised and funded and remains safe and sound. Now, obviously, it would say that, wouldn't it? But I think the reason that we can be sure that is the case, it is because the Bank of England is willing to step in wherever it needs to. And we should be grateful to have it. It's a very powerful organisation.
Do you anticipate there'll be further casualties in the global banking sector?
There might be. And European banks are where people are looking. So what bank analysts say is that post the 2008 financial crash, London moved quite smartly to do all of the things necessary to prevent this from happening again. And European banks didn't really, and you can see that with Credit Suisse, it didn't really do all the things that it should have done to make sure it never happened again. So that's what people are looking at in the city. They're looking at some other big European banks and wondering which of them is vulnerable. No one's worried about any of ours.
But if European banking continues to struggle, could there be a knock-on effect for us?
There is a potential knock-on effect, and I guess it's the closer to home it gets, the more concerning it is. But still, even if another couple of big European banks go under, there's a knock-on effect there for people who work in the city for sure. Our banking system should be absolutely fine, and I'm going to bet and say that it will be absolutely fine.
You wrote for the paper today about how digital banking has impacted things. Just tell us about that.
Well, one point that I made in the paper today, which might be of slight concern, is that when Northern Rock went bust last time, in order to get your money out, people had to queue at branches. Now, loads of people are on an app. So if there is a panic and everyone decides they just want to move their money out of a bank, well, it can happen in hours. So banks have less breathing space. They've got less time to offer the reassurance that they used to be able to offer. They used to have a week. Now if everyone panics at the same time and goes on their banking app and moves money that way, it can unravel much more quickly, is a slight cause of concern.
So essentially it means banks can fall quicker then?
Well, exactly. So it's a digitalization of everything, means things move faster in the financial world. It used just to be that city traders could move money in a second. Now pretty much all of us can. And that may be a concern.
You can read more from our financial editor Simon English online at standard.co.uk. And that's it from The Leader. This podcast is back tomorrow at 4 p.m.